Good morning, everyone. Can you all hear me? How
Yes, we
was
can.
your health break? And how was the networking? I hope you had a great start for today's session. I will be hosting and moderating the upcoming events. My name is Fasil Ayele Gabrisadik. I'm the Director of Financial Markets at FSD Ethiopia. FSD Ethiopia is engaged in supporting the financial sector development and deepening. We work closely with the Capital Markets Authority, the ESX, and also support the Ministry of Finance and the Central Bank in areas where we could provide some needed inputs, where we could connect the dots, where we could facilitate the work that's been underway right now. We have three pillars. The one that I lead is the financial markets or capital markets pillar. And we also have a colleague here sitting that's leading the financial inclusion, digital financial services pillar. We also have a climate finance pillar, and these are our engagements at FSD, and you're all welcome to this event. Going forward, the pace of reforms is accelerating in Ethiopia, and government is leading the charge. And for the first time, there is a bit of a concern that if the private sector is really stepping up to it. The private sector has been the one that's been asking those reforms for a very long time. And there has never been the willingness from the Ethiopian government to very much come out and say, here are the reforms, and what are you going to do with it? And now the private sector needs to do a lot of catching up. You'll be surprised the extent of work that's been done by the Capital Markets Authority. Dr. Brook is not here. The team that he's leading, they've been drafting the directives for the operationalization of the exchange, the licensing and regulation of the intermediaries. They're also working on a whole host of directives for the issuance of for the development of issuers. The ESX team is working tirelessly to set up the exchange. We're still asking, where are the private sector? Who are the ones that are going to be listing on the exchange? Who are going to tap into the capital markets that have been currently in the process of taking foothold in Ethiopia? Now, with that, I would like to first invite presenters that will give us certain perspectives from the region, from East Africa to the countries that we're very closely tied to, and then from the broader sub-Saharan Africa. What it's been like to open up the financial sector? What is it like to liberalize the financial sector? And what does it mean to aim for regional integration? How do we go about it? How do we take advantages? And then how do we also overcome the challenges? Now with that, I would like to invite our first presenter, Chiza Charles. He's the acting director in the in the Department of Economic Development and Trade and Tourism, Industry and Minerals at the Africa Union. He is an experienced public policy practitioner with demonstrated global experience in international trade and policy affairs. He will walk us through what does it mean to be in an integrated economy? What does it mean to do the work that we need to put ourselves in a situation where we can regionally integrate? So with that, I'd like to invite Chiza Charles to the stage. Is Chiza going to be online or is he in person? Okay, unless Chiza is showing up, then I'll still keep talking. Oh, Chiza is here. Great. Can you hear us?
Hello, Mr. Moderator. It's a wonderful morning and a pleasure for me to be here. I can hear you clearly. I hope you can hear me as well.
Welcome, Chiza. Please take it away.
Thank you so much. I'm assuming you are giving me the floor to continue with my presentation.
Yes. Please go ahead with your presentation, Chiza.
Thank you so much, Mr. Moderator, once again. First of all, I'd just like to thank the organizers of the East Africa Finance Summit for allowing me to be part and parcel of this great summit this year. I remember I also participated in the one for 2022, which is wonderful for us to be sharing experiences about the various things that affect our economy in Africa. So as you introduced me, I'll be talking on regional blocks and financial integration, especially implications for the finance sector in East Africa. Let me put a little disclaimer here that I'll also be talking about the global approach into the whole of the African continent, since I am from the African Union Commission. So a little bit challenged with my slides, seems they are not moving. Okay, there they are. So this is my outline of the presentation. First, I will give you a walkthrough on the brief background of regional integration in Africa. Then I'll talk about the African Continental Free Trade Area Agreement. Then I'll talk about the implications of regional integration for the finance sector before concluding. So, as many of you might already know, this is just a piece of history. Africa's integration history started way back in the 60s with the independence movement. By that time, by 1963, the African Organization of the African Unity, OAU, was formed. Then the focus was mainly on the political emancipation of the continent. However, when it comes to the issues of integration, the thinking then was that, yes, we are becoming independent as African countries, but it is very, very necessary for us to become economically independent as well. This led in 1981 to the development and adoption of what is called the Lagos Plan of Action. This was done in Lagos, Nigeria at that time. So if you read about that plan, it's not about the politics of colonization. It's not about anything else. It's about economic development. And one of the chapters in that plan of action actually was talking to the issues of finance and trade. They discovered that time as African heads of states and government that they cannot be as effective if they are not economically independent. Then with time, in 1991, again in Nigeria, the African Union heads of states and government met and decided even a more broad step. That time they decided to establish an African Economic Community. This is popularly known as the Abuja Treaty of 1991. They discovered that just like the European Union, at that time it was called Economic Community for Europe, EEC, is a good model that the African continent also needed to do. So they also decided to come up with an African Economic Community. If you look at that plan of 1991, it advocated for incremental integration, that the continent needs to be more integrated. And that was where they discovered that we needed to use regions now as models of integration. So the regions would integrate first, for example, the East Africa region. Then after that, the Southern African region, all the regions. Then the regions would now come together to form what is called the African Economic Community. So in the region which we are talking about today, there was one major economic community that was established, the East African Community, EAC. But in addition to that, we know that East African countries are also mostly members of what is called the IGAD, Intergovernmental Authority for Development, and also COMESA, the Common Market for Eastern and Southern Africa. So these are the RECs which were dedicated for the region that we are talking about. Now, going ahead, they said these RECs should integrate in stages. And there are 6 stages that were subscribed for this treaty. But I'm not going to talk about that, but just to indicate that the first stage was the need to strengthen the RECs. Then thereafter, the RECs were required to form what is called free trade areas, then move to customs union, and then later on to common markets. So when you're talking about a common market, you're talking about more of financial integration. It's more embedded into that. Then in 2013, Africa was celebrating 50 years of integration after the establishment of the OAU in 1963, as I mentioned earlier. And that time they came up now with a new agenda, which is called the Agenda 2063 of the African Union. So that agenda is the African Union Economic Transformative Agenda. And it has got projects in it, about 14 projects. There are 2 that are very relevant to what we are talking about today. And these projects were supposed to be implemented in 10-year phases. So in those projects, there are 2 which I mentioned are very important for the conference today. The first one is the African Continental Free Trade Area, and the second one is the African Financial Institutions. So this is the establishment of the African Monetary Fund, the African Central Bank, and then the African Investment Bank. Now, we talked about the AFCFTA, and in a minute, I'll tell you why that is very important to the finance sector. So the AFCFTA is actually a free trade area, and this free trade area has been designed in a framework model. What that means is that it has got protocols under it. As of now, there are about 9 protocols, as you can see from the screen. Because of time, I am not going to take time to go through all of these protocols, but just to indicate that the FCFTA is not a classical free trade area. That's why you can see that it has got all these nodes down there. But one thing that is important for this conference is the second protocol you can see on the screen, called the Protocol on Trading Services. Why is this protocol important? It is important because one of the sectors that was selected for liberalization is finance, which you are all occupied about today. So as I said, there are 5 sectors that were selected for liberalization: business services, financial services, communication services, transport services, and tourism services. As of now, 52 member states have submitted their services offer. And in East Africa, all the countries have submitted their offers, except Ethiopia, which is still in the process of submitting the offers. When we're talking about offers, what we mean by this is that each and every country decides on its own to say, for us, these are the areas that we are going to liberalize or to open up. For example, when you're talking about financial services, you might say, okay, we are going to open our banking. You might say, no, we are going to open our insurance. So these are examples of the offers. And then you also stipulate that if we open our banking, but if you want to open a bank in our country, these are the conditions that you have to be followed. The same thing with insurance, whether you're talking about telecommunications. We recently saw Safaricom coming into the Ethiopian market, for example. It's an example of how Ethiopia has opened up in the communication services. But before Safaricom came in, there were conditions that were agreed upon. So that if you abide by those conditions and if you agree, then you can establish in Ethiopia. So this is an example of opening in the services liberalization in the region. Going forward, what is the general status in terms of the FCFTA? I just talked about the services sector, but the reality now is that 54 out of the 55 African Union member states have signed this agreement. The signature means that they are willing to implement the agreement. And out of this, 47 have actually ratified the agreement. Ratification means that they are ready and willing now to implement the agreement. So when we come to Ethiopia, East Africa, all countries have actually signed the agreement except for Eritrea. However, when it comes to ratification, 4 countries are yet to ratify, showing that they are not yet ready to implement the agreement. So these are Somalia, the Sudan, South Sudan, and Eritrea. Now, why are we talking about the FCFTA and why is it important? So I'm just going to give you some few facts about why this is important, especially to the private sector. What is happening with the FCFTA is that it is creating one large market. We are talking about 1.2 billion people. This is the population of Africa. And that population is rising each and every day. And then we are talking about a combined GDP of about 2.5 to 3 trillion United States dollars. That's a huge market for the private sector. And then with this big market, it just makes business sense for businesses now to come from all over the world and locate into the continent. In the past, businesses were going elsewhere, but now we expect that now businesses will be flocking to Africa because it has become a big market. And then the second issue about the AFCFTA is that it is providing a predictable legal framework for trade and investment, hence offering more guarantees to investors. So we're talking about a market that will be certain and a market that is going to be predictable. So with this, what is happening now is that you have heard so many people, especially from the rest of the world, saying, I cannot invest in Africa because Africa is risky. But when you have this legal framework, it is going to help that narrative in that now the continent will be de-risked. So that's why this agreement is very important. Another argument about investing in the continent has always been the fact that people have said that if you consider the countries on themselves, their economies are small. For example, if you are in Ethiopia and you establish in Ethiopia, that means you are only talking about the Ethiopian market. But now with the FCFTA, you're talking about the whole continent. And that argument, therefore, is no longer there. That means if you establish in Ethiopia, you can trade throughout the East African region, you can trade throughout the whole continent. So that is the beauty that the African continent or free trade area is offering. Now, what are the implications to the finance sector? I'm going to take this into 2 rounds. The first round I'm going to talk about is to the industry itself. Then later on, I'll talk about to the finance as a profession. Then thereafter, I'll conclude. So to the industry, what does the finance, what are the implications? As I said earlier, it's predictability in the finance industry. Now you know what rules are going to apply across the continent. And then the second thing is we are going to see an increase in demand for financing and other trade financing tools. As people are now gearing up to establish in Africa, they'll be looking for more financing so that they can start their operation in the area, in the continent. The same thing about the increase in demand for financial services market. The people now will be looking for financial services that are there, whether they are looking for syndicates, whether they will be looking for loans just to start a business. All this is going to come up. Then the other thing is that there will be harmonization of financial regulatory requirements. Since we are talking about one market, it can only function effectively if the regulatory requirements are almost the same. So we are going to see more of that. And then for the private sector, now if you are established in Ethiopia or Uganda, for instance, you have now the impetus to look beyond your Ugandan market or your Ethiopian market. You'll be looking for opportunities, whether it's in Sudan, whether it's in Eritrea, whether it's in Kenya or Tanzania, wherever, because that now becomes your domestic market. You are no longer just looking at your own country, but you can now look beyond. That means new opportunities are going to open up for the finance industry. Then because the AfCFTA is talking about trade, we are going to see an increase in the payment systems for cross-border trade. Already there's a new payment system that has come up with the Afrexim Bank. It's called Pan-African Payment and Settlement System, which is going now to allow traders across countries to use their local currencies, no longer to look for foreign currency to trade. So we are going to see new innovations coming up in the industry, such as in the payment system. And the last thing that I would want to talk about when it comes to the industry is equal treatment of service providers. This is called the most favored nation. Since now it's an eco economy, you are now talking about having similar conditions across the regions. So that too is something that we need to take note of. Then finally, Mr. Moderator, I'll just talk about the implications to the profession itself, finance profession. Here, when I talk about finance, I would also include accounting professions because I know you have so many accountants in the room. As we said, there will be more companies establishing, there will be more companies looking for financial services. We also see an increase in the demand for finance and accounting professions. And then since now we will see a lot of international companies coming to establish in the continent. This will require professionals that are able to know international accounting systems and also international banking standards. I've given examples of IPSAS and Basel just for that, but I know you people know far much better than me what are these international requirements when it comes to accounting and as well as banking. So those now will be in more demand. Professionals who know that will be in more demand. Then the issue of free movement of services and people. As I said earlier, with the increased markets, people will be free, professionals will be free to offer their services across the border. And the professionals will also be able to go and establish across the border. So we expect that this is going to affect the profession across the continent. The last but not the least, for you to effectively practice in this new market, you need to know more about this protocol and what it says about the rules and regulations in this market. So, Mr. Moderator, I didn't want to take more time. This is my take on what could be the implication of this AfCFTA of regional integration in the region. I thank you very much.
Thank you so much, Chiza Charles, for an inspiring presentation.